Maverick Traders. It is so nice to see you again. This is Rob. I'm joined by Darren Fisher, and we are now past May monthly options expiration going into the June month. So let's take a quick recap of what happened this week, put us on a good path going forward. We finally got that market breakout. Now, we've been talking for the last 6-7 weeks. We've just been in this range. And last week, I said I think we stay in the range for the foreseeable future. And last week, I even said I think we trade down to the bottom of the range first before we end up breaking out somewhere in the next month or two. Well, the market doesn't always listen to what I say, and it said, hold my beer, I'm just going to break out now without going down and touching the bottom of the range. So we had a breakout by the S&P, and look, it was the Qs that pulled everything up. The Qs have been so incredibly strong. I mean, look at that chart. The breakout was so incredibly strong that it just pulled everything up with it. And I want to show you this chart. I came across this chart. Take a look at the yearly performance numbers. Now, these numbers aren't completely accurate up to date, but you can see that the NASDAQ is completely outperforming the rest of the market, and the rest of the market is flat to up slightly. This has been a one-sided market, and the Qs have pulled everything up. Remember, things are always positively correlated. The Qs are positively correlated with the spiders. Sometimes they're less correlated, like now, but they go back to being correlated. That means that one of two things have to happen. Either the Qs have to come down or the S&P has to catch up, or both can happen. The Qs can come down a little bit, or they can go flat, and the S&P can catch up to it. One of those is likely to happen. So I really like the trade of being long S&P and mildly short in technology. And we're going to be talking about that trade quite a bit. Let's talk about all the other asset classes. We saw bond yields break higher. We now have a much higher chance of an interest rate hike at the next meeting than we did just a few weeks ago. And the regional banks bounced big time this week, up 7%. Last week, I said these were about ready to roll over and die. Completely wrong on that call. Regional banks up 7% for the week. So overall, it was a bullish week. And if we take a look at the economic reports, the reports weren't great. Take a look at that. Empire State Manufacturing Index, minus 31. That's a horrible number. Retail sales, missed. Philly Fed was better than expected, but still negative. And then we heard from Chairman Powell on Friday. There was nothing really surprising that he said whatsoever. The market just slept through it. So overall, we're still in the same place. We have a weakening economy, but not too bad, just slightly weakening. Corporate profits came in much better than expected in the first quarter, which is why we're getting this move higher. Especially large cap tech ended up doing very well, much better than earnings estimates. So overall, we have this environment where the companies in America are still quite profitable. The economy is slightly getting worse, but we have a Fed that is probably almost done. Darren, would you say that sums up where we are here in the markets?
I think it is. And I throw another wrench in there. I mean, you've got the dichotomy between the Empire Manufacturing and the Philly Fed. I mean, you're right. You have to be off for the economists to be off by so much on Empire State. Again, we've been talking about this all year. The Fed needs to feel that they're on solid ground. That their economists have a pulse on what's going on. I mean, to have a 28-point miss on the Empire State has a lot of people with egg on their face. But to have, but even a 9-point miss to the upside on the Philly Fed, the Fed is looking at this going, we thought we had this locked down last month, that we knew what was going on, and some of the smartest, brains in the room can't give us a good picture of what's going on in the economy.
Yeah, Darren, I think you make a great point there. So let's just look at the raw numbers and the raw charts. So everything we just talked about, we call it cocktail talk at Maverick. Let's look at the charts. Let's look at the actual numbers. This week, Dow Jones was flat. S&P up 1.7%. Look at that. NASDAQ 3.5%. Russell up 2%. Oil had a nice week. Gold down quite a bit. So overall, this was a risk-on week. And here we are. We have a clear breakout. Now, this is something I always like to say, and you've heard me say this before, but I'm going to say it again. If you woke up from a coma, you've been in a coma for 20 years, you had no idea, and the first thing you did was look at this stock chart, or look at this chart of the market, and someone said, hey, do you want to go long or short? You didn't know any of the cocktail talk we just talked about. You would look at this and say, well, that's a pretty dang good breakout. I think you need to be long. So guess what? That's the correct answer. You need to be long. But here's the problem. My guess is you don't feel bullish. I don't feel bullish. I talk with a lot of traders out there. No one feels bullish. No one thinks that this is a great economy like we had in 2020 and 2021 or back in, 2006. Everyone understands that the economy is kind of weakening a little bit. We have inflation every time you go to the store, every time you fill up with gas. All of these things are now weighing on your conscience. You know someone who's having a hard time getting a job or something like this. All of these things, this is what your feelings are made out of. So your feelings are a culmination of all the things that you take in around you. And all the people that are around you, if you have negative people around you that don't think the economy is doing very good either, that's going to soak into your subconscious. And then your feeling is simply the reflection of all of those things. I get it. You don't feel bullish. Guess what? I don't feel bullish either. Here's the problem. The market doesn't care about your feelings. This is a breakout. Plain and simple. This is a breakout. So we have to respect that. We have to honor it. Now, this is a massive breakout, huge breakout. And I already know some of you are saying, Rob, that looks like a blow off top. Okay, I'll agree with you there. This does look like a massive short squeeze and a blow off top. Now, again, blow off tops, people always say, oh, that's the end of the trend. No, I agree that this move is likely extended and likely exhausted. I'll agree with anyone who says, hey, I think the NASDAQ probably needs to come down a little bit or take a break for a while. 100%. I'm on board with that 100%. So this chart says, okay, if you miss this run, you probably need to wait for the next run. However, this chart says, get on board. We're going places. This is why I like S&P type stocks long and Q type stocks mildly short. For any of you pairs traders out here, this is a pretty easy call. Long spiders, short Qs. We did get a little spike up in the VIX, and I think as we're getting into the debt ceiling talks, I think that's starting to weigh on people's mind. That is the one thing that is hanging over the head of this market, is the debt ceiling talks. Late on Friday, one of the parties walked away. Earlier in the week, both parties said, hey, we see a path forward. We're going to get this done. We're not going to let anything default. And then on Friday, they walked out of the room because people weren't negotiating. So I think there's going to be some turbulence here. I wish we didn't have this debt ceiling talk because I think it would be a much cleaner trade without this hanging over the head of the market. I fully expect this market to have a couple of maybe down 1 or 2% days over the next couple weeks, just due to the volatility of this. My belief is they will be pushed to the brink to make a deal. Look, we all know a deal is going to happen. Everyone knows that. It's so dumb. But will they make it early and amicably? Doubt it. Darren, what's your call on debt ceiling talks?
It's going to go to the wire. And I actually would not be surprised if we didn't get a resolution on this till the second week of June, to be honest. The Treasury Department can do some really funny accounting and keep from a quote default, but this is going to come down to the wire.
They are politicians, so let's not give them any benefit of the doubt. So look, let's kind of sum this up. Market outlook, bullish. We think the better trades are in non-tech. The debt ceiling likely going to cause some short-term volatility. What I think you want to do is be a buyer on those down days. Look to enter your bullish trades on those down days. I think it's going to be a much better entry point for you and put you in a little bit better position. And then, of course, we are going into seasonality, less volatility during the summer. Not a whole lot on the calendar this week. We do get the Fed minutes on Wednesday, and we do get the core PCE price index on Friday. That is the Fed's preferred inflation number. I think that's the big number of the week on Friday. When we look at everything on a chart, and this is purely charting, we are at a +2. We were at a +1 last week. We've now moved it up to a +2. This is moderately bullish.
Now, for the past couple of weeks, we've been seeing some interesting divergences between the broad market and the sectors. You can see anything interest rate related, utilities, real estate had a down month. I mean, utilities just got absolutely pummeled, and real estate was close behind as well. Healthcare down 2/3. Okay, that's normal volatility. And what worked? Communication services and tech. I mean, those are your two large cap, big tech sectors right there, and they did the best. Everything, industrials, financials, consumer, had pretty decent weeks as well. Energy was in there too. Materials, again, just normal stuff. Now, where we're going to see the breakout is we're going to take a look at the individual sectors right now. Where we're going to see the divergence is when we look and rack and stack all the sectors against each other. You're going to see a majority of stuff is going to be 0 to -2. And there's only going to be a couple stuff, a few sectors at +2. So it's like this breakout. If you take a look at a horse race, you've got the full pack at the beginning. Nobody's really going to move a whole lot. And then the last quarter of the race is when you get your breakouts. And I think that's what we're seeing right here. So you can see utilities just absolutely clobbered. All 5 days, down red candles. I mean, this was a 0 last week. And to go from a 0 to a -2, I mean, that's some pretty healthy downward movement right there. There is nothing about this that says neutral or bullish. So utilities are definitely out of favor right now. Looking at communication services, nice breakout again. I said last week I was at a +1. I said, you give me some follow through on this. You can make me the case for be a +2. That's exactly what the market did. So communication services, just on a technical basis, my feelings aside, it's got to be a +2. Looking at real estate, not clobbered as bad as utilities did, but it did break below what was previous support right there. And it looks to be making another leg down. So this is the less bearish than what utilities is, but it's still a -1. And it's down from a 0 the previous week. Look at industrials, had some positive movement on. Now Friday's candle looked pretty ugly, but you've got to be a little bit happy about this. I mean, last week we were at a -1. It's at the top of the range right now. I think it's a 0. I think it goes sideways. Now look, it breaks above that 101 mark. Happy to be more bullish, but right now utilities is just saying we are going to be choppy and moving sideways here. That's what the chart says to me. Same thing with healthcare. I mean, you've had 2-3 weeks of down, but we've bounced off that 50 right there. So the rules are, if it's above the 50-period moving average, then we're bullish. If it's below it, it's bearish. Now the caveat to this is take a look at that long upper shadow. Okay, healthcare tried to make a move up to the middle of that range, and that just got sold. Any positive movement just got absolutely sold. It still was up for the day on Friday, but that's still a pretty ugly candle to have at the close of a week, especially at in the past 3 weeks have been down. So I'm just at a 0 right now. I'm going to let you healthcare tell me which way to go. Not expecting a whole lot of movement up or down on it. Financials is another one. We were -1 last week. It's up there in the 0. I mean, you've got a pretty good trend right there between the 32 and 33 area. That's kind of where we've been for the week. A very narrow range right there. So, and you look at the moving averages; they're just slap right on top of each other. So this, I think, is going to again move sideways. It's a little surprising that financials didn't move when the interest rate sensitive stuff took a hit. Utilities and and real estate took that hit, but financials really, didn't move a whole lot. We're still in this trend. So it's just kind of again, interesting cocktail talk, what is actually going on in the markets. Looking at consumer, this is looking pretty good. Had that breakout, Siemens Communication Services. I'm at a +2 right now. You can't be bearish this at all. And you have to say this is more than a +1 market environment. Take a look at Wednesdays and Thursdays candles. I mean, that's some really good movement. And I think we still held to the middle half of Thursday's candle, even though we were down 0.8% on Friday. Still, a lot of people came in and bought it right there, that lower shadow. So I think we might get a little bit of a pullback here, but I think long term, that's 3 weeks, 5 weeks. We're looking at consumer to be a +2. And same thing in tech. Yeah, we broke out on Tuesday. It looks like broke out right there, and just was up. And again, like you said, Rob, you could make me the case this is parabolic, but look, how many parabolic moves have we seen in the past 20, 25 years that have just kept going? And anybody who's shorted into those without confirmation has just, had their throat slit. So this is one of the ones I do not want to be in front of this train. If this could keep going, I think you have to play it. Now, I'm not going to play it all in. I think I'm going to be looking at stuff that hasn't moved. It's going to be more value oriented, and I hate to say that because I think a lot of the value traps are just that, value traps. But some of the stuff that's moved 100% in the past year, that's a little rich for my blood. I'm going to be looking at stuff that is still in positive trend, but hasn't had moves like this. And that's where if I'm going to put anything into tech, that's where it's going to be kind of mid cap, not the large cap tech. Look at materials. Last week we were at -2, and it got up there. I'd say we're in that 0. It broke below that 78 trend right there, at 78 support, and now we're up above it. I think the cap on this is probably going to be in the 80 range, but again, we're right in the middle of a range, so I think the materials go sideways, looking a lot better than it was just last week. Finally, looking at energy, we were -2. It's come up. I got to say -1 right now. You take a look at the movement it's had. Now, this is also one of those ones. Is it a bear rally? I don't know yet. We're going to wait for a confirmation. We had a bear rally right there and made a new low. Are we going to go up there? Are we going to regain that 20 period? Are we going to regain that 50? Let's see. If we do get a decisively lower low and a lower high, that's all this was a bear rally. And I think we go back down. We could break through to new lows. So just mildly bearish on energy right now to -1. This is what I was talking about earlier. On the downside, utilities is looking the worst at -2, and that happened over the period of 1 week. Real estate and energy, both at -1. You've got 4 sectors: materials, financials, healthcare, and industrials, all at 0, looking to be just moving sideways right now. Nothing at negative, nothing at +1 right there. There's nothing that is just mildly bullish, but there's stuff that is moderately bullish. Tech, consumer, communication services. So you've got this breakaway of those three sectors. And everything else is just kind of sitting at 0 to at neutral to slightly bearish. So we can just see, looking at these sectors, this is what's driving the markets right now. These 3 things: communication services and tech. That's the big cap stuff right there, and a lot of the consumer names as well. So just bear that in mind when you're taking a look at. All right, looking at real estate. Last week we were short VNO, and this just kind of reflected the market right now. It's still a weak chart. This is another good entry point for it right now. It didn't do exactly what we wanted it, but give me a lower low and a lower high. This is still, I think, a viable trade. So it was up about 2.6%. If you've got some more time in this trade, I wouldn't worry about it at all. Right now we're looking at Blackstone Mortgage Trust. This is in a nice low base. How do you want to play this? Let's go out to June. And play the 17-18 fair call spread. This doesn't move very much. Look at the scaling; they're only dollar scalings. You're probably going to be you're probably going to pull 60 cents out of the credit, and have 40 cents at risk. Give yourself a full option cycle to get through it. And I think this looks like a very good trade to the downside. In communication services, last week we were sideways on T-Mobile. And you can see this is one of the ones that just kind of broke out of its range. Again, we've got more time on this. It just broke below the 140, barely. Okay, we're at went down to 138. Yeah, now we're we closed at 139. This thing could easily get back up. I think the midpoint on this is about 145. I think is where we had it. So all we need to do, give me another week to get up to about that 142 area. I think this trade gets profitable again. Right now, we're looking at Comcast A shares. Right now, nice bull pullback, and confirmed on Thursday that pullback's done. We pulled back to the 20, based a little bit right there, and then Thursday it was like, okay, put your foot on the gas again, looking pretty good. So how do I want to play this? I want to go out to the June expirations, go long those 40s, and then short the May 26th 42s against it. So I'm just saying, look, just give me $1 in a week. Just get up there, about 80 cents. And the next week, I'm going to be happy. Then I'm going to see where it goes. That's going to be the top one to get up there at the 42. And this looks pretty good. This is one that's been very strong since about it had some trouble at the beginning of the year, but since about mid-April, it's really come out and done well. So I like Comcast right now. And healthcare. Last week we were long Eli Lilly, and we didn't get any explosive moves to the upside, but we're still up about 2% for the week. This is just keep chugging along right there. I mean, you could make me the case, well, hey, we broke out on Friday. Great. I'd love to see another run. I'd love to see 4 or 5% move next week. This is going to move at the pace it wants to, and but I like this trade right now too. This is doing pretty good. Right now we're looking at Exact Sciences. This is one that this is why we use screeners, because if you ask me what Exact Sciences does, I would have no freaking clue. But you use a screener, you don't have to know stocks. You don't have to use a watch list. Okay, we had a high base. We had a breakout from that high base. And this thing had a gap up and held it. And then we just broke out again. So how do I want to play this? I'm going to go out to June, short those, go long the 80s, short the May 26 85s, give it a week right there. And I might end up keeping the long calls if this does what I want it to. I mean, you can see we're just asking, move between, $2, in a week, and this thing can do it. You look at the scaling on this. This could move. You've got money behind it. You've got people that don't want to sell. I mean, this is the perfect thing. You've got a definite imbalance. A lot of demand, very little supply. I could see this thing going up there too.
The industrial sector was a 0. Last week, we played it sideways, Union Pacific. And I don't know if we've ever hit a weekly return like this before, but Union Pacific was down 0.01%. So when you make a sideways call and after 5 days, it has literally gone nowhere, that's a good call. Look, we got one more week on this trade. 200 is the midpoint. I don't see any reason why this trade isn't profitable. This week, let's talk about BZ. This is a Chinese staffing company, Kenshun Limited. Again, as Darren said, I've never played this before. Screener gave it to me. I don't care. I don't need to know really what they do. I know they're in the industrials. I pull up a chart and I can see this big old descending triangle pattern here. So big old descending triangle. I really love these kind of patterns. Now look, these things I like to think of a bouncy ball bouncing off of a desk. It bounces off a desk and at some point it ends up rolling off it. So this kind of a trade is all about time. We think it's going to break down to another level. We don't really know when. So this is where time is definitely going to be very important. I'm going to go all the way out to the Junes. So that's giving me a full month. So this thing could just hang out in this area for a couple weeks. I don't really care because I'm looking all the way out to June 16th. And again, the 15-1750. So this one has a lot of delta on it. This one's got a lot of delta and could be very, very profitable if it does roll off that table. In the financials, I got to say that I was a little bit surprised that the rest of the sector in financials was weak because this is the regional banks and they had a monster run, 7%. We had a short on this one, and this one is very, very highly likely to expire next week at a max loss. So that's why we position size for max risk. This week, Visa. Visa's in this nice ascending triangle pattern. As you can see here, we've made this run up, and now we're just getting tighter and tighter, tighter. Same thing here. We don't know when this is going to break. I love to play these with diagonal call spreads. The reason for that is that I can get in right now, and if it stays in this ascending triangle, I'm totally fine. A diagonal call spread is a theta positive trade, meaning the longer I hold it, as long as it doesn't go against me too much, I make money. So if it stays in this area, that's great. If it breaks out and runs, I'm profitable. That's great. But what I love is when it goes sideways for this first week, and then I'm able to hold the long calls after that and get the breakout. That's when these get really exciting. So I really like this chart pattern on Visa to break out to the upside somewhere for the next week or two.
And consumer. Last week we were long the VIP store. VIPS is the chart for this. And you can see everything was looking good up till Thursday. So apparently some sort of news event came out on Thursday, and it dropped dropped an entire dollar, which for a $16 stock is a fairly impressive way to go. Again, this is why we size for max loss. I mean, if this gets up there, above the 1550 area, great. We might eke some sort of a profit out of it. But at this point, I'm not even going to look at it until expiration to see what I need to do. And this week we're looking at Walmart sideways. Now this is a huge behemoth company, and you look at it, and again, it's not broken out to the upside. It's not broken down to the downside. This is one of those ones that mirrors a lot of the a lot of the different sectors. Everything is just kind of going sideways. So if it's going sideways, hey, let's do a 2-week trade. Zooming on the chart right there, we're sitting right at 150. So you know what? Let's make that the midpoint. 145, 150, 155 butterfly for 2 weeks. And I think as long as you're between about 153 and 147, anywhere in that area, I think is going to be a decent profit. So we're just saying, hey, hang out here, don't do anything stupid, and let's just let theta work on our side. Okay, so last week in tech, we were short team. And this is another one that just said, yeah, I don't want to break down anymore. Watch this. And you can see it had 3 up candles, huge up candles this week. And it's up 8%. So I don't think this one comes back. This could be some sort of a bear rally, but I don't think we have enough time to get to a max gain on this. And this went really good. What we're looking at is Hewlett Packard sideways right now. And again, this is another 2-week trade. We're just going to say 28, 30, 32. Hang out in that range that you've been in, please. And with the midpoint, we're expecting a little bit of a pullback down to that 30 area. But if you're going to stay in a trend, let's make money off the trend. And this is why we love options, because if you were just playing the underlines, if you were just playing the straight stock, you got 3 choices. You've got long, you've got short, you've got cash. We've got that additional choice of, hey, let's play time. Let's play it sideways. So there's no such thing as dead money for an options trader, and this is why we love this. We can make time-dependent bets and make money when everybody else is sitting on their hands and trying to make something happen. We can just go with the flow and go sideways.
Right, jumping into the materials sector. The materials sector, Darren, you had it at a -1 to a 0. Last week we had a trade on BHP Billiton where we were sideways to slightly bearish, and it was basically flat. It basically went up, I think, 0.3% for the week, which is fine. We are just totally fine if we put on a trade that's sideways to bearish and it goes sideways. We're very happy with that. Ultimately, we do want this to drift down. We do want this to drift down over the next 5 days. That's going to be a much bigger profit for us if we do get a little bit of a drift down. This week, we're looking at Linde PLC. This is a foreign chemical company, and you can see that it wants to go higher. We got a nice high base forming here. So the big question is, okay, how do we want to play this? Now, you could do a targeted butterfly somewhere up in here. The problem is, I think when this thing breaks out, it could run fairly substantially. So I'm just going to go with a pretty boring, just vertical spread, and I'm going all the way out to the monthlies because there are no weeklies on this one. Just saying, I think this thing over the next month ends up above 380. It's got a nice chart pattern. I'm just giving it a week. $9 on a $370 stock. You're asking for about 3%. That's a very reasonable target here on a very bullish stock. And let's finish off with energy. We've been mostly sideways in energy, and we were sideways in Chevron, and Chevron basically went sideways. So exactly what we wanted it to do, just simply went sideways. This week, we are looking at another sideways, but we're just going to be sideways to bearish. Energy was a -1. It looks like energy wants to just keep drifting a little bit lower, stay where it is. That's fine. We'll take advantage of that. Now, I don't have a lot of positions that expire next week, so I wanted to put on another one. So I want to put together a trade that is just slightly bearish, a little bit bearish, or even neutral. If it just hangs out in here, we've got no loss whatsoever. We've got it capped off at 37. If it breaks out above that, that's our max loss point. And then down below 35, we don't get any more money from there. So this is just a straight, basically 50-50, 1-to-1 spread here. And we just want this thing to drift down here over the next 5 days. Well, that wraps it up for our picks. Maverick Traders, if you want to share picks with other traders, go to the website. You know where it is. Log in, jump on the forum. Let's start talking it up. We always love to see when our traders are working together. To wrap this all up, the market's bullish. Look, I know you probably don't feel bullish. You look around, you say, it doesn't feel bullish. The market is doing its thing. Here's the thing I learned years ago. I can feel one way and trade the other way. And to be honest with you, that's probably the thing I'm the most proud of developing in my trading career, is that I can trade totally different than my opinion. I can tell you my opinion of what happens, and you look at my portfolio, and I'm the exact opposite way. Why? Because that's what the chart says. I do think you want to be wary of the cues. Look, I could be eating crow here. That's fine. I'll come in next week and say, yeah, that was wrong. The cues were up another 4 or 5%. But as far as risk reward goes, I think the better risk return right now is in the other part of the market. So I think you expect regular stocks to outperform the cues. The debt ceiling is not going away, and it's likely going to be becoming more and more important. What typically happens when these kind of things are hanging over the market, you're going to get days that are down 2%. It's just going to happen. So we're going to be in this uptrend, but we're going to get these massive corrections. I think those are the days you want to start taking some bullish positions that you're looking at. I think those are going to be much better entry points than buying in on strong days. So if you've got some trades you want to do, you've got some capital, let those market freakouts happen. Go in and take your positions there. Well, that wraps it up. Thank you so much. Have a great weekend. Goodbye, everybody.
Good trading, everyone.